Question 1. Which of the following statements best describes the concept of insurable interest in insurance contracts? A. Insurable interest refers to the financial stake that a policyholder has in the subject of the insurance policy at the time the policy is issued. B. Insurable interest means that the policyholder must have the ability to pay premiums before an insurance contract is valid. C. Insurable interest allows an individual to insure any property or life, regardless of their connection to it, as long as they can provide an estimated value. D. Insurable interest is a requirement that applies only to liability insurance policies and not to property insurance. Answer A. Explanation. Insurable interest is a fundamental principle in insurance law that requires the policyholder to have a legitimate financial interest in the property or life insured. This means that the insured must suffer financial loss if the insured event occurs, ensuring that the policyholder is motivated to prevent loss or damage. According to New York insurance law, specifically SS 3401, a person may not insure a risk in which they do not have an insurable interest at the time of the insurance contract. This principle prevents insurance contracts from being used for gambling purposes and ensures that policies are written to cover real and existing risks. Option B is incorrect, as insurable interest is unrelated to the ability to pay premiums. Option C is false because it implies that anyone can insure anything, which contradicts the requirement of having an insurable interest. Option D is misleading. Insurable interest is required in both liability and property insurance. Question 2. In the context of property claims adjusting, which of the following methods is most appropriate for determining the value of a damaged item that is not easily replaceable? A. Actual cash value (SEV). B. Replacement cost value (RCV). C. Market value. D. Depreciated value. Answer B. Explanation. Replacement cost value (RCV) is the most suitable method for determining the value of a damaged item that is unique or has no easily available market price. RCV calculates the cost to replace the damaged item with a new one of similar kind and quality without deducting for depreciation, while actual cash value (SEV) considers depreciation, thus potentially undervaluing unique items. Replacement cost ensures the policyholder can restore their property to its original state. Market value is typically used in real estate transactions rather than personal property claims. Depreciated value similarly reduces the item's worth based on age and wear, which may not accurately reflect its replacement cost. Understanding the nuances of these valuation methods is crucial for an adjuster in accurately assessing property claims. Question 3. Scenario-based. Mr. Thompson, a homeowner, recently experienced water damage in his basement due to a burst pipe. He filed a claim with his insurer. After the adjuster evaluated the damage, they determined that the repair costs would be $15,000. However, Mr. Thompson's policy has a $2,000 deductible. What is the maximum amount Mr. Thompson should expect to receive from the insurance company after his claim is settled? A. $13,000. B. $15,000. C. $12,000. D. $10,000. Answer A. Explanation. When calculating the payout on an insurance claim, the deductible amount is subtracted from the total repair costs. In this scenario, the total repair costs are $15,000 and Mr. Thompson has a deductible of $2,000. Therefore, the calculation for the payout is as follows. Pay equals total repair costs. Deductible equals $15,000. $2,000 equals $13,000. Thus, the maximum amount Mr. Thompson should expect to receive is $13,000. Option B is incorrect as it does not account for the deductible. Option C is also incorrect since it incorrectly applies an additional subtraction. Option D is incorrect as it significantly underestimates the payout. This scenario illustrates the importance of understanding policy deductibles and how they affect the total claim settlement. Question 4. Which of the following best describes the role of the New York Department of Financial Services (DFS) in relation to insurance claims? A. The DFS primarily oversees the underwriting process for insurance companies operating in New York. B. The DFS is responsible for regulating the settlement of claims and ensuring fair treatment of policyholders. C. The DFS only handles consumer complaints after a claim has been denied. D. The DFS does not have any authority over insurance claims and only focuses on financial institutions. Answer B. Explanation. The New York Department of Financial Services (DFS) plays a crucial role in regulating insurance practices, including the settlement of claims. The DFS ensures that insurance companies treat policyholders fairly and comply with state laws regarding claims handling, as outlined in the New York insurance law. This includes overseeing the claims process to prevent unfair claims practices and ensuring that insurers adhere to ethical standards. Option is incorrect because while the DFS does oversee insurance companies, its role encompasses more than just underwriting. Option C is misleading. The DFS is involved in proactive regulation, not only in response to complaints. Option D is incorrect because the DFS has jurisdiction over insurance claims and practices, not just financial institutions. Question 5. When investigating a bodily injury claim, which of the following pieces of evidence would be most crucial for an adjuster to evaluate liability? A. Eyewitness testimonies. B. The insured's insurance policy details. C. The injured party's medical history. D. The adjuster's personal notes. Answer A. Explanation. Eyewitness testimonies are often the most critical pieces of evidence in evaluating liability in a bodily injury claim. They can provide first-hand accounts of the incident, clarifying the actions of the parties involved and helping establish fault, while the insured's policy details, option B, are essential for understanding coverage. They do not directly impact liability assessment. The injured party's medical history, option C, can provide context for the claim but does not determine liability. The adjuster's personal notes, option D, may include observations but are not considered objective evidence. Therefore, eyewitness testimonies are paramount in establishing a clear narrative of the incident and assessing liability accurately. Question 6. What is the primary purpose of subrogation in the context of property insurance? A. To allow the insurance company to take over the policyholder's claim entirely. B. To enable the insurer to recover costs from the responsible party after paying a claim. C. To eliminate the need for policyholders to pay premiums if a claim is filed. D. To ensure that all insurance claims are settled fairly without litigation. Answer B. Explanation. Subrogation is the process through which an insurance company, after paying a claim, seeks to recover the amount paid from the party that caused the loss. The primary purpose of subrogation is to hold the responsible party liable for damages, thereby allowing the insurer to mitigate its losses. Option is incorrect as subrogation does not involve the insurer taking over the policyholder's claim. Option C is misleading. Subrogation does not affect premium payments. Option D is not accurate because while subrogation aims to ensure fairness, it does not inherently eliminate the potential for litigation. Question 7. During an investigation of a property damage claim, what factor is most critical in determining whether the damage is covered under the policy? A. The age of the property at the time of the loss. B. The cause of the damage. C. The insured's payment history. D. The geographic location of the property. Answer B. Explanation. The cause of the damage is the most critical factor in determining coverage under an insurance policy. Most policies specify covered perils, and understanding what caused the damage helps in assessing whether the event falls within those perils. For example, if the damage resulted from a covered peril such as fire or theft, the claim would likely be honored. Conversely, damage from excluded perils such as flooding in a policy without flood coverage would not be covered. Option A. The age of the property may impact depreciation but does not determine coverage. Option C is irrelevant to the coverage decision, and option D, while potentially relevant in some policy contexts, is not as directly impactful as the cause of damage. Question 8. In a liability claim, which of the following elements must be established to prove negligence? A. The presence of a contract between the parties involved. B. The occurrence of an intentional act. C. A duty of care owed by the defendant to the plaintiff. D. A specific dollar amount of damages. Answer C. Explanation. To establish negligence in a liability claim, one of the fundamental elements that must be proven is the existence of a duty of care owed by the defendant to the plaintiff. This means the defendant had a legal obligation to act or refrain from acting in a certain way to prevent foreseeable harm to others. Option A is incorrect because negligence does not require a contractual relationship. Option B is false, and negligence involves unintentional acts, while intentional acts fall under different legal theories. Option D, specifying a dollar amount of damages, is not a prerequisite for establishing negligence, but rather a component of proving the extent of damages after negligence is established. Question 9. Mr. Garcia is filing a claim for a theft that occurred in his apartment. He has provided the adjuster with a list of stolen items and their estimated values. Which of the following actions should the adjuster take next to proceed with the claim? A. Immediately approve the claim based on the provided list. B. Conduct an independent investigation to verify the theft and assess the validity of the claim. C. Deny the claim due to lack of police report submission. D. Request a detailed inventory of all items owned by Mr. Garcia. Answer B. Explanation. In handling a theft claim, the adjuster should conduct an independent investigation to verify the circumstances surrounding the theft and assess the validity of the claim. This may involve gathering evidence, such as police reports, witness statements, and any other relevant information that supports the claim. Option is incorrect because the claim should not be approved without thorough verification. Option C may be premature unless the policy explicitly requires a police report before claim approval. Option D is not necessary at this stage, as the focus should be on verifying the reported theft and the values provided rather than obtaining a full inventory of all belongings. Question 10. Under New York insurance regulations, what is the maximum time frame within which an insurer must acknowledge receipt of a claim? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Answer A. Explanation. Under New York insurance law SS 2601, an insurer is required to acknowledge receipt of a claim within 10 days. This regulation is intended to ensure prompt communication between the insurer and the policyholder, fostering transparency and accountability in the claims process. Options B, C, and D are incorrect as they extend the acknowledgement period beyond the legally mandated 10 days. Understanding these timelines is critical for adjusters to ensure compliance with state regulations and to effectively manage the claims process. Question 11. Which of the following accurately describes the term insurable interest in the context of property insurance? A. The ability of an insured to profit from a loss. B. A legal right to insure property against loss or damage. C. The requirement for a policyholder to pay premiums before claims can be made. D. The obligation of an insurer to cover all types of losses, regardless of the circumstances. Answer B. Explanation. Insurable interest refers to the legal right to insure property against loss or damage, which exists when the insured would suffer a financial loss if the property were damaged or destroyed. This principle is fundamental to insurance contracts and ensures that insurance is not used as a gambling device. Option A is incorrect. Insurable interest does not involve profiting from a loss. Option C, while related to the claims process, does not define insurable interest. Option D is misleading. An insurer's obligation is limited to covered losses as per the policy terms, not all types of losses. Question 12. In New York, which document outlines the specific coverage, exclusions, and conditions applicable to an insurance policy? A. Endorsement. B. Declarations page. C. Application form. D. Policy form. Answer D. Explanation. The policy form is the comprehensive document that outlines the specific coverage, exclusions, and conditions applicable to an insurance policy. It contains the detailed terms and definitions that govern the relationship between the insurer and the insured. Option A, an endorsement, modifies the original policy and is not the primary document. Option B, the declarations page, provides a summary of coverage but does not detail all terms. Option C, the application form, is submitted by the insured to obtain coverage but does not outline policy terms. Question 13. Which of the following practices would be considered an unfair claims practice under New York law? A. Failing to conduct a proper investigation before denying a claim. B. Acknowledging a claim within the required time frame. C. Offering a settlement that is less than the full amount claimed. D. Responding to a claim with the appropriate documentation. Answer A. Explanation. Under New York insurance law SS 2601, failing to conduct a proper investigation before denying a claim constitutes an unfair claims practice. Insurers are required to thoroughly investigate claims to ensure fair treatment of policyholders. Option B is a correct practice and not considered unfair. Option C, while potentially contentious, is not inherently unfair if the settlement is justified by the evidence. Option D represents proper claims handling, which is not an unfair practice. Question 14. Mr. Jones filed a liability claim after being involved in a car accident. What is the adjuster's primary responsibility when handling this claim? A. To determine fault and assign blame to Mr. Jones. B. To negotiate a settlement amount without assessing damages. C. To investigate the circumstances of the accident and evaluate damages. D. To advise Mr. Jones to file a lawsuit against the other driver. Answer C. Explanation. The adjuster's primary responsibility in handling a liability claim is to investigate the circumstances of the accident and evaluate damages. This includes gathering evidence, interviewing witnesses, and assessing the extent of the injuries or damages incurred. Option is incorrect because the adjuster must remain impartial and cannot assign blame. Option B is improper, as negotiations should follow a thorough assessment of damages. Option D is also inappropriate, and a adjuster should not advise legal action unless it is necessary to resolve the claim. Question 15. What is the primary purpose of a claim settlement agreement? A. To transfer ownership of the insured property to the insurer. B. To legally bind the insurer and insured to the terms of the policy. C. To document the terms under which the insurer agrees to pay the claim. D. To waive all future claims related to the same incident. Answer. C. Explanation. The primary purpose of a claim settlement agreement is to document the terms under which the insurer agrees to pay the claim. This agreement outlines the specific conditions of the settlement, including any releases of liability. Option A is incorrect, as settlement does not transfer ownership of the property. Option B is misleading. While it involves legal binding, it specifically pertains to the settlement terms. Option D is not universally true. Waiving future claims depends on the language of the settlement. Question 16. Which of the following types of coverage would protect an insured against losses due to vandalism? A. Comprehensive coverage. B. Collision coverage. C. Bodily injury liability coverage. D. Personal injury coverage. Answer A. Explanation. Comprehensive coverage protects an insured against various types of non-collision losses, including vandalism. This type of coverage is designed to cover damages that are not the result of a collision with another vehicle or object. Option B. Collision coverage applies only to damages resulting from collisions. Option C. Bodily injury liability coverage pertains to injuries caused to others, not property damage. Option D. Personal injury coverage typically covers non-physical injuries such as defamation rather than property damage. Question 17. What is the significance of the replacement cost value RCE in property insurance claims? A. It refers to the amount necessary to repair the damage without depreciation. B. It is the market value of the property at the time of loss. C. It represents the maximum payout an insurer will provide for a claim. D. It is the value after deducting the policy's deductible. Answer A. Explanation. Replacement cost value (RCV) refers to the amount necessary to repair or replace the damaged property without deducting for depreciation. RCV is crucial because it determines the amount an insurer will pay for repairs or replacements, ensuring that the insured can restore their property to its pre-loss condition. Option B describes market value, which can be significantly lower than RCV. Option C is misleading. RCV is not a maximum payout, but a basis for calculating claim payments. Option D is incorrect because the deductible is subtracted from the payout but does not affect RCV directly. Question 18. Which of the following best defines subrogation in an insurance context? A. The insurer's right to deny a claim based on fraud. B. The process of transferring the insured's rights to recover damages to the insurer. C. The obligation of the insured to provide full disclosure of all claims. D. The agreement between two insurers to share losses. Answer B. Explanation. Subrogation is the process by which an insurer, after paying a claim to the insured, obtains the insured's right to pursue recovery from the responsible third party. This process allows insurers to recover losses and helps maintain fair insurance premiums. Option is incorrect. While fraud may lead to claim denial, it is not related to subrogation. Option C describes the insured's obligations but does not define subrogation. Option D is not accurate. Subrogation involves the insured's rights, not an agreement between insurers. Question 19. In New York, what is required for an insurance company to rescind a policy due to a misrepresentation made by the insured? A. The misrepresentation must be intentional and material to the risk. B. Any misrepresentation, regardless of intent, is sufficient for rescission. C. The insurer must wait until a claim is filed before rescinding. D. The insured must admit to the misrepresentation in writing. Answer. Explanation. Under New York insurance law, an insurance company can rescind a policy due to a misrepresentation only if the misrepresentation is intentional and material to the risk being insured. A material misrepresentation is one that would have influenced the insurer's decision to issue the policy or set the premium. Option B is incorrect because not all misrepresentations warrant rescission. Option C is misleading. Rescission can occur before a claim is filed if the misrepresentation is proven. Option D is also incorrect. Written admission is not necessary for rescission if material misrepresentation is established. Question 20. In the context of insurance adjusting, what does the term actual cash value mean? A. The total replacement cost of a property minus depreciation. B. The original purchase price of the property, regardless of its current value. C. The value assigned to property based on the insured amount. D. The fair market value of the property at the time of loss. Answer A. Explanation. Actual cash value (ACV) is defined as the replacement cost of property minus depreciation. It represents the current value of the property considering its age and condition, and is commonly used in property insurance claims to determine how much an insurer will pay for a loss. Option B is incorrect. ACV takes depreciation into account rather than just the original purchase price. Option C is misleading. The insured amount may not reflect the actual cash value. Option D describes fair market value, which can differ from ACV due to depreciation considerations. Question 21. What is the primary function of the National Association of Insurance Commissioners, NAICA, to enforce state insurance laws across all jurisdictions? B. To develop model laws and regulations for state insurance departments. C. To provide direct insurance coverage to consumers. D. To investigate and settle insurance claims on behalf of policyholders. Answer B. Explanation. The NAIC's primary function is to develop model laws and regulations that state insurance departments can adopt to promote uniformity and protect consumers. While it does not have enforcement power, its guidelines significantly influence state regulations. Option is incorrect. Enforcement of laws is a state responsibility. Option C is misleading. The NAIC does not provide insurance. Option D is also incorrect. The NAIC does not handle claims directly. Question 22. Which of the following best describes the duty to defend in liability insurance? A. The insurer must pay all settlements agreed upon by the insured. B. The insurer has an obligation to defend the insured against lawsuits covered by the policy, regardless of the lawsuit's merits. C. The insured must defend themselves and only seek reimbursement from the insurer afterward. D. The insurer can refuse to defend the insured if the claim exceeds policy limits. Answer B. Explanation. The duty to defend means that the insurer must provide a legal defense for the insured against lawsuits that fall within the policy's coverage, regardless of the merits of the case. This obligation is broader than the duty to indemnify, which is about paying for covered losses. Option is incorrect. The insurer's obligation to pay settlements is contingent upon coverage and limits. Option C is misleading. The insurer takes the defense responsibility. Option D is also incorrect. The insurer must defend even if the claim exceeds policy limits. Question 23. Under New York law, what is the maximum time frame an insurer has to pay a claim after it has been approved? A. 30 days. B. 45 days. C. 60 days. D. 90 days. Answer C. Explanation. Under New York law, once a claim is approved, insurers have a maximum of 60 days to issue payment. This requirement helps ensure timely compensation for policyholders following a loss. Option A is incorrect. 30 days is not sufficient. Option B is also incorrect. 45 days is not the specified limit. Option D is misleading. While some insurance processes may take longer, the payment requirement is 60 days. Question 24. What is the role of an insurance adjuster in a claim settlement process? A. To advocate solely for the insurer's interests. B. To facilitate communication between the insurer and the insured while assessing the validity of the claim. C. To provide legal advice to the insured. D. To determine whether the insured should be charged higher premiums. Answer B. Explanation. The role of an insurance adjuster is to facilitate communication between the insurer and the insured while assessing the validity of the claim, just as investigate claims, evaluate damages, and negotiate settlements in good faith for both parties. Option is incorrect. Adjusters must remain impartial. Option C is misleading. Adjusters do not provide legal advice. Option D is also incorrect. Premium adjustments are made based on underwriting guidelines, not the adjuster's role. Question 25. In a property insurance policy, which of the following would typically be classified as a named peril? A. Theft. B. Vandalism. C. Fire. D. All of the above. Answer D. Explanation. All the options listed. Theft, vandalism, and fire are examples of named perils. Named peril policies cover specific risks that are explicitly listed in the policy, meaning only those perils are insured against. Option is not sufficient. It's only one example. Option B is also insufficient by itself. Option C, while correct, does not encompass the complete range, therefore D is the most accurate answer. Question 26. What does the term coinsurance mean in property insurance? A. The sharing of risks between multiple insurers. B. The requirement that the insured carry a minimum percentage of coverage on a property. C. The policyholder's obligation to pay for minor damages out of pocket. D. The agreement between insurers to divide the premiums collected from insureds. Answer. B. Explanation. Coinsurance refers to a provision requiring the insured to carry a minimum percentage of coverage on a property, often 80%, 90%, or 100%, to receive full coverage for a loss. If the insured does not meet this requirement, they may incur a penalty on claims. Option A describes a different concept related to multiple insurers. Option C refers to deductibles, not coinsurance. Option D does not relate to coinsurance in property insurance. Question 27. Which of the following statements regarding liability coverage is true? A. Liability coverage only pays for property damage caused by the insured. B. Liability coverage includes protection against bodily injury claims made by third parties. C. Liability coverage is optional for all types of insurance policies. D. Liability coverage does not cover intentional acts of the insured. Answer. B. Explanation. Liability coverage typically includes protection against bodily injury claims made by third parties as well as property damage. It is designed to cover the insured's legal responsibilities arising from negligent acts. Option is misleading, and liability coverage includes both bodily injury and property damage. Option C is incorrect. While it may be optional in some contexts, liability coverage is mandatory for specific types of insurance, such as auto insurance. Option D is true, but it's too narrow since B captures the broader scope of liability coverage. Question 20. What is the purpose of a waiver of subrogation clause in an insurance policy? A. To allow the insured to receive full payment without any deductions. B. To prevent the insurer from seeking reimbursement from a third party after paying a claim. C. To enable the insurer to investigate claims without limitations. D. To increase the premium costs for the insured. Answer. B. Explanation. A waiver of subrogation clause prevents the insurer from pursuing a third party for reimbursement after paying a claim. This clause is often included in contracts to maintain a collaborative relationship between the parties involved. Option A is incorrect. The clause does not pertain to payment amounts. Option C misrepresents the clause's purpose, which does not affect the insurer's investigation rights. Option D is misleading. While it may impact premiums indirectly, the primary purpose is not related to cost. Question 29. Which type of insurance provides coverage for losses due to employee theft? A. General liability insurance. B. Property insurance. C. Crime insurance. D. Professional liability insurance. Answer. C. Explanation. Crime insurance specifically covers losses resulting from theft, burglary, or fraud committed by employees. This type of insurance is crucial for businesses to protect against internal theft. Option A is incorrect. General liability insurance covers bodily injury and property damage, but not employee theft. Option B may cover some theft-related losses, but not specifically for employee theft. Option D pertains to professional services, not employee crime. Question 30. In New York, what is the statutory limit for the time period within which a policyholder must file a lawsuit after a claim is denied? A. 1 year. B. 2 years. C. 3 years. D. 6 years. Answer. C. Explanation. In New York, the statutory limit for filing a lawsuit after a claim is denied is generally 3 years. This limit applies to most contracts, including insurance policies, and is important for ensuring that claims are resolved in a timely manner. Option A is incorrect. The period is longer than 1 year. Option B is also incorrect. 2 years is not the correct time frame. Option D is misleading. While 6 years applies to some legal actions, the more typical period for insurance claims is 3 years.